Welcome to today's edition of LendTech Briefing. Pamela Herman here with Mortgage Cadence, joined today by Chase Gilbert, President and co-founder of Bilt Technologies. Chase, thank you so much for joining us here at Next Mortgage.
Thank you for having me.
Tell us a little bit about Bilt Technologies.
Yeah, so we're an enterprise technology company focused on the construction and renovation lending space. So specifically, we're focused on the post-closing management of construction loans. It's an area that has been very underserved by technology, and it requires coordination between a lender, their borrower, the builder, third-party inspectors, as well as even title companies, and the realization that if we could connect everyone with a digital interface so that they can see in real time what's happening on a construction project, that we can actually help these loans become less risky and we can expedite the flow of funds into construction projects.
So how is this different? And explain it to me like I'm in fifth grade. How is that part of the industry different from any other type of lending transaction?
You know, it's interesting because I've thought a lot about, call it the last 2 decades, where even the loan origination space has made leaps and bounds progress relative to how it was happening, where it was very much a lot of paper, a lot of back and forth between parties, not a lot of digitization. And when I think about the kind of the back office administration of construction loans, it's actually very much the same. It's still very analog, and digitization is just now creeping into that area of the industry. And because it's an area of lending that can be very high risk, it really needs it. And you know, I would argue probably more so than most. So the servicing of these loans is just complex, and it needs a lot of attention and oversight during the construction phase.
So is your value proposition more around the security side of it, or is it about the efficiencies or the borrower experience, or all of the above?
All of the above. You're stealing my thunder. So I like to think about it in 3 kind of core buckets. So there's the credit risk management as well as the compliance ramifications of making sure that you have policies and procedures to manage this area of risk. The next bucket is exactly what you said, it's the efficiency gains. So today, the way most people in the industry are managing construction loans is spreadsheets, emails, phone calls, and faxes bouncing back and forth between key parties. And by bringing that process online, you can do it much more efficiently to the benefit of everyone involved. The last being the actual improvement to the borrower experience. So for the first time ever, they have transparency into what's going on. They can actually see where their construction loan sits at all points in time. And I like to joke that if you can and kind of watch a pizza come to your front door through Domino's app, you should be able to see your construction loan at all points in time.
It's such a great analogy because Domino's says we're not a pizza company, we're a technology company that sells pizzas.
Exactly.
And it's so fascinating because I think that took everybody back to thinking, well, wait a minute, shouldn't pizza be your core offer? But you're spot on in that the consumer, when you're thinking from the perspective of the consumer and what do they want an experience that's just fast and easy. They just want to get in that house, right?
Absolutely.
So, so with construction loans being a little bit different, do you feel like the borrower better understands the progress of the entire building as opposed to just that lending part of it?
You know, today I would say that construction and renovation lending, especially in the consumer space, it's a black box. It's very, very confusing and a bit mysterious for most people. And that's why I think that we're starting to see the industry it become much more mainstream, because I call it the HGTV effect, where you see everyone building a home or renovating their home. And now all of a sudden people are saying, well, wait a minute, I want to do that, especially because there is a lack of purchase inventory. So it's harder to find new construction homes or even move into a new home that's already been built. So all of a sudden more people are inquiring about this area of lending. And what they're finding is that it has been a bit of a black box, you know, where they're being told, you know, yep, you can get a construction loan, but they don't really understand what that means. I think a lot of people think it means when you close it, you just get the money and you're supposed to pay the builder as they build it. But obviously from the lender's vantage point, they want to control that process really to mitigate their own risk of making sure every dollar goes into their collateral, the property being built,
yes,
as well as mitigate the risk for their customer, the borrower, so that they don't get out over their skis and accidentally give the builder all the money and the project never finishes.
Right. Just go to Mexico for that.
Exactly.
Okay,
exactly.
So when you're talking, so your primary customer then is not necessarily the borrower, but actually the builder? and then they're connecting you to the borrower?
So our real customer is the lenders. So we sell into lenders and we bring their entire management of their construction portfolio online, and it extends out to their customers, though, the borrowers and the builders and even the third-party vendors that they're using to oversee these construction projects. We basically built an ecosystem or a collaboration software platform that connects everyone involved. So I like to say there's a lot of buzz on digital acquisition and point of sale in the origination space, where you're actually extending out to the borrower and making it more convenient for them to apply for loans. We've basically applied the same principles post-closing on construction loans, where now it's kind of like online banking for their construction loan. They can see where it sits at all points in time. They can quickly make draw requests to fund their project and keep it pushing forward. The builder as well can have visibility to what's going on. So we've basically tied everyone together.
And the builders are going along with the lender's directive on here's how it's going to go down.
Exactly.
Okay.
Exactly.
So what are some of the biggest, I don't want to say objections, but what are some of the biggest mental challenges that lenders have around your technology?
It's change. It's the status quo, right? So the good news is that, at least in our experience, when we get in front of a lender and show them what we do, it's very hard for them to look at it and say, oh no, we should keep doing it on paper and with spreadsheets and emails bouncing back and forth. So we do tend to have a lot of success when we get in front of people. I think that change is scary, though, for anyone. Doesn't matter what it is. If you've been doing something a certain way for decades, and in our particular case, construction lending has taken place the same way for decades now, change is always going to be scary. So we try to really take a consultative approach to, here is how you're doing it today. We're going to document that process. We want to help you better understand your current pain points, as well as the future state of how, when you implement technology, whether it's built or anything for that matter, how it can get better and the areas we can help you improve. And when you take that approach, I think that the guard comes down.
Yeah,
and
the fear goes away.
Absolutely.
Because the resistance to change is fear-based.
Yeah.
And I think compliance is driving a lot of that fear. Any change we make might get our hand slapped, or worse yet, a fine or something like that. So that trust that you're building through that process, I would think, is really key in that rapport, relationship building. Now you can move into solutions, and at that point, I'm thinking they totally trust you. And
it's nice because you speak to compliance, and actually that has worked in our favor, because today construction lending is an area of lending that is perceived as high risk. It does get a lot of scrutiny from a regulatory perspective, where people want to know that you have policies and procedures for oversight on your construction portfolio, because things can go wrong very quickly. And today, when it's being tracked on paper, it's very difficult to actually decipher when things are going right and when they're going wrong. By digitizing the process, we help lenders proactively mitigate risk, which enhances their compliance. So actually, that's been I think I can attribute a large portion of our growth to that sheer fact.
that's so fascinating. So what's your background? Is it technology? Is it building? Is it lending? All of the above?
So more in the technology and in the construction industry. Lived firsthand the frustration of dealing with construction loans. Two of my business partners and co-founders, one of them is in the lending space, the other one was also a builder. And so we had a pretty unique vantage point on the fact that surely someone could apply modern day technology to this pain point to the benefit of everyone involved.
That is amazing. Great work. How long have you guys been in business?
So a little over 4 years now.
Wonderful, wonderful. And you're based out of?
Nashville, Tennessee.
That's right. Wonderful Nashville.
It
Go
is
there for
indeed.
music and food.
And construction. It's
And
a lot of it.
Come talk to Chase.
Absolutely.
Chase, thank you so much for joining us,
Pam,
sharing
thank you.
your insights on Built Technologies. Super excited to learn more about your work and to watch your progress in the future. So
Thank you very
continued
much.
Success. Thank you so much for joining us on today's edition of LendTech Briefing. Please subscribe to our channel for more updates and news and information for the mortgage lending industry. And for now, this video is a wrap.